Hello everybody, and welcome to the Killer Whale Ventures Livestream. How are you all doing today? Let us know in the comments. Today we're going to be talking about some of the top assets in the crypto space and the Mag 7. We're going to be talking about Bitcoin breaking out of its bear flag that we're currently in and achieving target number 1 on that bear flag today. I want to start by saying this stream is going to be 100% community driven. So we'd like to get your feedback, your comments, your questions. We want to start doing indicator and strategy reviews. We want to start doing asset requests. So if you have any assets that you'd like to request, just go ahead and drop them into the comment section below. And this stream is 100% sponsored by us. If you'd like to get access to our industry grade tools, we've built an entire platform derived around 3 different AI models: conservative, moderate, and aggressive. You can find all of the information about that at killerwhaleventures.com. Yeah, so let's go ahead and get started. I'm going to bring in one of my partners here and see if, this is one of our first streams that we've done here. So hello Ethan, can you hear me? Hello brother.
Hello, how are we doing?
Fantastic. Yep, I think I got you here. So very cool. All right, I'm just gonna start on my spiel about Bitcoin, Ethereum, XRP, so on and so forth, and we'll just kind of go from there. And we got some news to go over, some technical analysis to go over, talk about risk management automation, and a few different things. If you would like access to any of the TradingView algorithms and strategies that you see on this stream, just go ahead and send us a message in our Discord support, and we are giving away all of our suite of TradingView indicators completely for free while we're getting this stream off of the ground. So first things first, let's talk about Bitcoin. Bitcoin still in the bullish control zone, although I'll get to the technical analysis side of things here in just a second. We can see that we are having a breakdown right now out of a bit of a bearish formation. So we are getting a little bit closer to our line in the sand here at around 80,000, 81,000 before we go into bearish control. So let's go ahead and take a look at the technical side of this real quick. And let me turn off our long-term algorithm here, and we'll just go ahead and look at it on a purely technical basis. So as we've seen that I've been talking about, we had been forming somewhat of a triple top here, and ever since we got rejected on that big landslide move October 10th, we've been in a bearish stance market-wide. Still in our bullish control zone, but everything has been quite bearish since that October 10th landslide that we had. What we've been talking about the last few days on the stream is this bear pole bear flag structure. So this is a technical analysis pattern where we have an ascending triangle. Remember, ascending patterns typically end up bearish and descending patterns typically end up bullish. And what have we seen just in the last couple of days here? We're looking at the 12-hour chart, and just in the last couple of days, and really in the last 48 hours or so, we really started to break down out of this bear flag, and we did achieve target number 1, which I was talking about on Sunday and Friday last week. That's probably our first stop. We saw that at about 85,500. Next stop that we're looking at, if we continue this bearish swing, is going to be 83,900, and then our third target in this bearish formation is about 80,600. So really that $81,000 level is where we do not want to cross, because if that happens, I'll go ahead and turn on our long-term algorithm again. It would be the first time in over 2 years that we've seen bearish control. So we really don't want a 12-hour candle close to close below 81,000. Although we have measured our fourth target all the way down to 65,000. So if the selling continues, we could have another 25% drop on Bitcoin. I know that's not what people want to hear, but that's just the reality of the situation at the moment. we are in a bearish, formation. Technically, we're in kind of a bearish stance on this, at least this technical analysis play. And if we do break below this $81,000 level, we'll be moving into some bearish control there. Okay, let's go ahead and move forward from Bitcoin. Actually, we could talk a little bit about the technicals here. So on the day, the oscillators are giving us a neutral signal. Moving averages are giving us a strong sell, which makes sense because the moving averages are pointing to the downside. And then our sentiment summary is giving us a sell as well. So quite the bearish outlook on the daily. On the weekly, same sort of thing. We got neutral on the oscillators, and then moving averages giving us a sell signal. And in turn, the sentiment summary is also giving us a sell signal. On the monthly, we're sitting neutral across the board. So typically, I will say this is usually in a buying hold pattern. So you really don't see it move over this neutral. And if we do see some more bearish price action coming, we might even see these go into the sell side. So very interesting. Typically on the month, we are sitting in those bull control zones, but we're not seeing that at the moment. I did add another coin to the main coins that we're going to go over here, and that is Binance Coin. Binance Coin has had an absolutely epic run this year and has really been an outlier in the space because not a whole lot of coins have been making new all-time highs this year. Particularly, we've seen a lot of downside action in the crypto space all of 2025 really, and Binance Coin actually just hit a new all-time high recently of 1,300. I remember when this thing was like $5. Okay, so this thing has done extremely well over the years, and we're going to cover it here on the stream. I brought up our long-term Binance accumulation algorithm, which has performed at 83% profitable throughout the duration of its life. And how is that possible? Well, it just doesn't sell that often, right? And I'll say that a lot because our long-term accumulation algorithms, we really want to be reserving our selling activity for relative peaks in the market. So you can see the last selling activity that we really had was in September 2025 on the way up to all-time high. And then the last time before that was all the way in January 2024. So, when we're talking about long-term accumulation, we want to be accumulating assets that appreciate over time. There's no point in accumulating some of these meme coin cryptocurrencies that just got created and, are pump and dump scams. You're just going to be buying into the abyss forever. So I'm very, very forthright about our coin selection. Part of that coin selection is selecting assets that have appreciated in value over the course of time. So I'm adding Binance Coin, and we're going to talk about that one every single day here on the stream. Let's go ahead and move into XRP, and then I'll have Ethan come on board here again when we get over to the stock side of things. So let's just go ahead and take a look at XRP. XRP we've been speculating on because we're in this descending channel. So let me just drop this here. Let me get rid of our long-term algo so we can look at it on a technical basis. XRP is in a descending channel at the moment. We've been pretty firmly in this descending channel since that October 10th landslide move we had. And if you weren't around for that or were wondering what I keep talking about with this landslide move, XRP went from $2.76 all the way down to $1.75. So really we lost about $1 of value. And then there was a substantial amount of bullish action bringing that candle within an 8-hour period up into like some kind of hammer looking candle. Not really though, because these type of moves, typically a hammer candle would be a reversal type signal, but we've just been in a descending channel ever since then. And today we're seeing another slide on XRP of about 4% on the day. So we are currently speculating that we're going to have a bullish breakout of this descending channel at some point. But, basically I've just drawn on here kind of speculatively where we could see some moves like that. But in order to see a move like that, we're really going to have to find some support here. Bitcoin's going to have to turn around. We're going to have to see a turnaround in the greater altcoin space. So right now, we're just kind of hanging out at this level, just kind of waiting to see when we might break out of this descending channel. We might have a bounce off of the heart line, which we're looking at here. You can kind of see that we've formed a small wick at the bottom, and we have found a few hours of support on this heart line here. So looking for a breakout move to kind of help us finish this descending broadening structure as well. And typically what will happen is, as we're coming to a close of a descending broadening formation, what we'll have is the lowest low be put in, followed by a higher low. So we might be witnessing something like that right now, but we're just so close, and the market is very bearish on the crypto side of things at the moment, with risk on assets not really being, not really seeing any price appreciation from those Fed announcements with the rate cuts. So we're just going to have to hold on here. But I have seen many times in the past these descending structures either start with some sort of descending channel breakout, or we just start forming a higher low in which we start to float outside of this section. So what I would like to see is we have a breakout of this descending channel at some point, and then we can actually measure targets for the larger structure when we do start to break out of this descending broadening formation, which would bring us back up to that like all-time high level. But we're just going to have to sit and wait and see what plays out here. But we are currently just waiting for this descending structure to flip bullish at some point with a breakout. All right, moving on to Solana here. Solana, same story. We're in a bearish control zone on our long-term accumulation algorithm on Solana, and we are currently sitting in the zone of confluence. Solana is down 1.72% on the day today. So we're really just kind of same holding pattern as we are on XRP, just waiting for a descending channel break and retest before we can really speculate on a technical analysis style of play. But, I've drawn it on the chart here just to show people what it looks like. If you have any questions about any of this technical stuff, just drop it in the comments, and we'll be sure to address it on stream here. Let's go ahead and move forward here. Tron, again, one of my favorite coins to accumulate and one of my largest holdings. Why is it one of my largest holdings? Well, the reason for that is because it's never actually been in a bearish control zone. So this algorithm that you're looking at here, this green zone, is our bullish control zone. And as I've shown on the last several streams, this particular algorithm has never once seen the bearish control zone. So this asset's never been in a bearish control zone according to our long-term accumulation metrics. And this is one of our algorithms that we boast is 100% successful. Again, why is that even possible? How can you have a 100% successful trading algorithm? It's just because it doesn't sell that much, right? The last selling activity that occurred was back in December of 2024, and you can see the previous selling activity. We're selling at relative peaks, and we've been accumulating for a very long time. So this algorithm has never lost once in its entire life, and we don't expect that to start anytime soon, but we do need to see a breakout of this descending channel. And again, we're just kind of speculating what a breakout might look like in potential targets, but we can't really make any action on this type of play until we do see a break above the top descending trend line that we have right here. Just moving through this kind of quick. Gold, we were seeing a breakout going into last week. Let me turn our long-term accumulation algo off here, and we could talk about it a little bit more. So I did have one of our members point out to me that we could have drawn this descending trend line right here, but that's not how we're playing it at the moment. That would have been a nice area to maybe get into this play a little bit sooner, but currently we're playing it as if it's a symmetrical triangle and a bull flag. So we currently have 4 targets on our gold position here, and what we're really looking for is we did have that breakout exactly where I had put our breakout zone, which is this first circle here. So we came up, broke out. What we're looking for here is a retest somewhere in this zone or even back in the same bubble here, and that's where we're really going to load up. So made a small entry on this one during the breakout, but really what I want to see is come down and test this descending trend line for support. And once we see that, that's where we're going to begin adding our main portion of our position. And as you can see, we've measured our targets: 4,400, target number 2, 4,700, target number 3, 4,900, and then target number 4, $5,400 an ounce on gold. That would be absolutely incredible, and we're fully expecting that to happen. Just how long could that take? We've measured somewhere out till May 2026. That might be a little bit aggressive on the timeline because typically gold will see some longer consolidative type of movements. But as I had pointed out last week, Kathy Wood and a lot of other prominent analysts have been saying that gold is now a risk-off asset, whereas before going back to cash was the best risk-off play. Many large players, when they're going risk-off now, they're going straight to gold instead of going back to cash. So, okay, all that very good. I'm going to go ahead and bring Ethan back on here. We're going to move over to the Mag 7, and then I'd like to get some of his thoughts and opinions about what's going on here. So let me bring him in. Hello, hello.
Hello, hello.
Can you hear me all right?
Yes, sir. Can you hear me okay?
Yes, I can. I'm just going to turn your volume up a little bit. Go ahead and give us a check 1, 2 there.
Check 1, 2, check 1, 2.
Awesome. Looks like we got you here. So, yeah, let's go ahead and run through the Mag 7. Did you have any comments on anything I was talking about on the crypto side, or do you want to just go straight into the stock side of things here?
No, I kind of just want to dive straight into the stock side of things and just take a look at where we are, what we're doing, where we've been, and where we could possibly go.
Okay. Is there any asset that you want to start with particularly? I got Google pulled up here. We could look at this Tesla breakout that's happening at the moment. Yeah, where do you want to start here?
Yeah, absolutely. I mean, we can start with Google.
Perfect.
So Google obviously has been on just a massive move lately since, April of this year. It's just basically been straight up.
Yep.
A few weeks ago, we had Mr. Buffett announce a pretty large position in them as well, which kind of just further allowed this run to kind of rip. Let's see. I'm kind of looking at, we're definitely getting overextended, right? We got way high on our RSI. Looks like we tapped 76, 77 there. And we're getting some turnover and crossover on our MACD on some longer time frames as well. So I'd be looking for a healthy retest of like the 292 level on Google for that to kind of come in and act as support. Now, if we break below that, it's going to be a pretty quick ride down to 275s, and then from there we're looking at like 256. Now, with that being said, right, 256 is still bullish on Google, right? It's just a healthy pullback, healthy retest that these markets do need. I wouldn't be getting bearish on Google again until we lose like 237, right? Which I know is kind of a long ways off, but there's a lot of money to be made in there. But still, I mean, I'm a lot more of a long. I prefer to go long rather than go short. So I'll look for healthy retests of support levels and then just kind of wait for them to prove themselves and then ride their next wave up, right? So I wouldn't be surprised to see Google down in 290s, maybe even 270s. But we'll see because, I mean, we're end of the year. We're kind of lined up right with our Santa Claus rally. So any pullbacks that do happen could be fairly light.
Yeah, so on the chart here, I've just kind of drawn all of those levels that you were just talking about. Oh, okay, hold on 1 second here. We got our futures trade going through here. Give
All
me just
right, let's
one
take a look at that.
second and I'll pull that guy up. We could talk about that for a few minutes. That's what
Yes.
we've been waiting for here, is to get one of these live on stream. So let me just pull up. Oh, maybe that was a false alarm here. That might have been another signal. I have a whole bunch of these waiting to play out. Yeah, no, sorry, that was a different strategy, but that is that's one of the noises that I'm looking for, is that whale sound, and then I also have one that's a Martian gun, pew 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 pew. So if that happens, I'm gonna switch over to our futures. But yeah, let's go back to Google here. So you're talking support around 292. That makes sense because as we can see on the daily here, that's been both support and resistance. That 273 level never really acted as resistance, but definitely acted as support on Friday, November 14th. And then that 256 level was both resistance and support at one point. And then that 236 level you're talking about acted as support once before as well. So yeah, just kind of looking for a nice healthy pullback to, you know, a few of these support levels that we've seen in the past. It would only make sense that we do have some sort of sell-off on Google. And once we get that, Ethan, what would you be thinking as far as, like, you're the options guy? What kind of options play might you be taking on something like this?
Yeah, so with it being kind of end of year and Santa Claus rally, I would not be opposed to taking a shot at some longs here at this 291, 292 level. I do think bulls have a pretty good shot. We've reset our RSI. You can see RSI resets if you have RSI pulled up, Dylan.
I do.
They don't necessarily, you don't need a full reset, right? We don't need to go all the way back down to 30. We can just kind of dip back down into that 30 to 70 quote unquote healthy range and then work our way back up. So RSI is back in that healthy range. MACD, I mean, selling pressure is still pretty heavy with our MACD, which is why I do think a retest of this 292 is possible. But at that point, I do think, do you have your EMAs pulled up, Dylan?
Which EMAs would you like me to pull up? I am noticing also, now that we're talking about RSI, we do see some bearish divergence going on here with three lower high peaks from where we were in September. So that is very interesting. That would definitely lead us to have a little more conviction to a downside move here coming up. But yeah, what moving averages you want me to throw on here?
Pull up the 20 and the 50.
20 and the 50, you got it.
And you can kind of see what's happening right here.
Okay, pulling up the 20, and then let me pop on the 50 here. We'll make that one yellow. There we go. 50. All right, so I got the 20 and the 50 on the daily here. I also have the MACD and the RSI pulled up. So what would you like to see here, my friend?
So take a look at the 20 on the daily, and you can see that's where bulls are defending it right now.
Yep, absolutely. We've seen two different areas where the 20 has acted as support on the 13th of November and then the 13th of October. So about exactly a month apart. And before that, we even saw some support all the way back in August. Yeah, two different times in August. So yeah, we're definitely seeing this 20 being our level of support as far as the moving averages go. I will say it is starting to kind of curve to the downside, which would make a little bit of sense here because we are seeing that bearish divergence going on the RSI. So yeah, that 292 area is looking pretty tasty. I could see a quick move down there to find some support.
The reason I had you pull up the 50 is because if we kind of look at that, and this is just kind of experience coming into play, but if the bulls lose that 20 EMA, then the next test is going to be that 292 area, and more than likely what's going to line up with that during that time is our 50 EMA.
Mm-hmm.
So it just gives you kind of another shot, another area of confluence. And you're like, okay, so if the Bulls lose the 20, we need a healthy retest of 292. We get that healthy retest of 292, and we have our 50-day moving average. It just kind of gives you another layer of confluence to say, like, okay, there's a pretty good shot that we're going to make a move back up here. And continue. I mean, you can kind of see they're spread out, but we have just been making higher lows on our daily. I mean, this move to 292 could very well just be our next higher low.
Absolutely. I love that you're putting a bit of a different lens on this. So that's wonderful here. As you can see, you know, if you're looking at just the 20 and the 50, that is a very, very strong moving average combination. If you're not familiar in, you know, like a longer time frame, it works on, you know, Bitcoin. It works on cryptocurrencies. I either use like the 1020 or the 1030 more so for the crypto side of things, but the 20 and 50 is like the most prominent moving averages that everyone in the stock space is looking at, right? So, okay, very cool. I like that analysis a lot. So again, just to reiterate what that was, we're looking for that 292 area. If we don't find support on the 20 again here, which wouldn't surprise me at all, but we're looking for that 292, which would align with our 50 moving average. We do have a little bit of bearish divergence. So we have a little bit of mixed signals going on here in Google, but really easy to size up areas of support just from where we've come in the last few months. All right, very cool. Should we move on to Tesla here? Oops, might have lost you.
Oh,
Lost you for a second, but all right, very cool. Should we? I like that analysis a lot. Good things, and you know, Ethan's going to be joining us maybe a couple of times a week. So if we get some, you know, opportunities to go over some option stuff, we can look at some contracts. We can look at all kinds of things that he does his analysis for. Let's go ahead and move on to Tesla, huh?
yeah, let's take a look at Tesla.
So I don't know if you've seen the analysis that I've had on here most recently, but my analysis, we have a breakout of a descending broadening formation, which again, you will hear that very, very often on this particular stream. It's my favorite pattern to play. And, you know, we're looking at a descending broadening formation on the daily that just started to break out. So we're already in a move that has achieved 2 of its 3 targets here. So that move started back in August 2025, and we achieved 2 targets pretty quick. We're still in the third target of that play, so we've moved our stop loss back up to break even. And now we have a secondary play going on where we have a descending broadening formation. I thought there may have been like an inverse head and shoulders kind of thing going on, but it looks like that's not going to really be the case. We've just started to break out here. What's some of your analysis on this one at the moment, Ethan? I can toss it up on the screen here.
So we have started to kind of break out of that descending broadening formation. However, if you just go back historically a little bit, a few months, you can see we are at previous all-time highs.
Yes, we are.
Now, I like to refer to Tesla as the penny stock of the Mag 7 because it is, right? It will move just like a penny stock, even at $400 a share. There's lots of institutional buying that goes into this ticker. And the moves can be fast and violent, and if you're wrong, they can be ugly, right? So I would hesitate to play Tesla at these levels. It's just a little bit too middle of the road for me. We did have a breakout today, but if you look at our volume, it wasn't really anything. Yeah, it was up there, but it wasn't really anything to write home about, right? If I want to break out at previous all-time highs, I'm looking for a pretty massive volume candle to back that up.
Sure. It is
I'd
the
be
highest,
a lot more interested in Tesla.
highest amount of daily volume that we've seen to the bull side since October 25th. So a little over a month So the most volume we've seen on the bull side in a little over a month. But yeah, it's not
Yeah, but
like
I don't think it's enough to just confirm the all-time high breakout because we didn't quite get there, right? Previous all-time high on Tesla is 488.48, I believe. And we tapped today at 481. So we need some consolidation here, I think. I mean, we've kind of seen a little bit, but I just don't think we're primed for a huge move up yet.
I would agree. I would agree with you that Tesla has strange interactions and does weird things, totally out of the blue. But I will say, what would give me a lot more conviction on this is if we come back to retest that trend line and then do kind of like a retest and bounce. That would give me a lot more conviction. Even before we get to that all-time high level, like obviously tomorrow it could just hit that all-time high level and get completely rejected the rest of the week if the market keeps going down. But I would have a lot more conviction. I don't know about you, if we do come and retest that trend line and make a solid bounce on the top side of that descending broadening structure. Would that give you a little more confidence too?
The way to play breakouts is waiting on your retest, right? Now there are traders and people out there who play breakouts as soon as they happen, and it's certainly a way to trade. It's an extremely risky way to trade, right? Because we've broken out of this broadening descending channel and we're flirting with previous all-time highs. So if you get into calls right here at 475, 480 area, and we do get a retest of, we could get a retest of like 436, right? 440. Any calls that you buy up in this 470 level are going to be absolutely destroyed. So absolutely a retest of that breakout would be a great spot to potentially take a stab at it. Now, when you're trading Tesla, you have to respect your rules. Like there's a reason you got into a trade. If that reason ceases to exist, you need to get out. Because if you start making up more reasons to be in a trade, your Tesla of all tickers will take your lunch money and your dinner money. It's done it to me before. I say it from experience.
Yes, of course. Yeah, no,
So yeah,
the area I'm looking
definitely.
at to like really get into this play from like my own spot side of things is like 453. That's kind of the area that I'm looking at to maybe enter this play with some solid conviction, at least on the spot side of things.
Yeah, and spot side for sure. That'd be a great place to start, especially if you're just doing shares, right? 450 would be a great spot to add with thoughts of, we could go down to 430 even, and it's like, okay, I'll buy some more down there, right? It's just with the amount Tesla can swing so fast, it's when you're wrong, you need to be wrong well, and you need to get out fast.
Yes, we call that losing gracefully around here.
Absolutely.
Okay, very good. I like that analysis that we just did on Tesla. Do you have anything else on Tesla before we move on here?
I don't. Let's take a look at Amazon.
All right, let's go ahead and take a look at Amazon here. Let me turn off our algo and we'll just look at it on a technical basis. So I don't know about you, I'm looking at this thing on the daily and I'm seeing a descending broadening formation. What are your thoughts
You
here?
love to see those descending broadening formations.
You're going to hear me say
I
that a
don't
lot on this
disagree.
stream.
That's a tight one, but it's there, right? Go ahead and turn on your 200-day moving average.
200-day moving average coming right up. Boop. There we go. You want me to throw the 50 and the 20 on there too, or are we just looking
throw
at
the 50
200?
and the 20 on there because they're doing something pretty interesting right now, which gives me pause.
Okay, let me turn this guy on. Okay, let me just make sure these are all on the right time frame chart. And chart. Okay, very good. Yeah, we got the 50, the 20, and the 200 on screen here. So absolutely, spectacular rejection off of that descending trend line the last few days here. We're on 3 solid negative days in a row. Coming up on our 200, what do you have? What are you looking at here, Ethan?
So that's our bull signal. That's where they need to defend, right? They need to hold that 219, 220 area to kind of prevent any more bleeding. Now, what kind of gives me pause here is our 20 and our 50
are beginning to cross
are
bearishly.
beginning to cross.
Yep.
Which, now the 20 and the 200 are definitely a more potent version of this. But the 20 and the 50 crossing in a bearish formation can be what's called a death cross. In a bullish formation, it can be what's called a golden cross, right? So if we lose the 200, that's going to cause the 20 and the 50 to cross. If both of those things happen, I would anticipate probably a retest of 200 on Amazon, right? There's about a
now
10%
that I'm
drop.
looking at the MACD here, it looks like we have a little bit of bullish divergence that would be from the last swing low around the end of September. And then we had a little bit of a higher low that we're trying to defend that bounced off of that 200, which formed a lower level of the pressure on the histogram on the MACD. So
Sure.
I am seeing a little bit of bullish divergence here on the MACD, but yeah, like you said, we really need to defend this 200 EMA level, and we have seen that act as support back in the end of November and then also middle of October. So yeah, that'd be a nice area to size up, maybe looking for a potential bounce here. That's actually really good because I was just speculating on this descending broadening formation, so that would actually allow me to move my targets around a little bit with some more conviction. So let's just go ahead and move my targets down here a little bit.
From an option standpoint, you could potentially take a bite off a low risk play here, right? Because we're trading at 222, 222.50, and our 200-day moving average is right there at 219.60, 219.61. So what you can do here is you can put, anywhere from 30 to 120. It kind of depends on your risk tolerance and management. The shorter expiration is going to carry more risk, but it's also going to carry more reward, right? But what you can do is essentially take a look at your options chain at this point and find a play. Take a long here on Amazon and use this 200-day moving average as your line in the sand. So if we come down here and we get a daily candle close, and that's important, you want to wait on daily candle closes when you're charting on the daily. You don't want to get wicked out by some crazy price action in the middle of a trading day. But if we get a daily candle close under this 219.60 level, then you need to cut your losses, right? Because that's going to be a pretty quick trip down to 212, and then from there, back down to 200s.
Mm-hmm.
And you don't want any part of that, especially if you're going to go with some shorter dated, like 30 days, right? But I don't hate Amazon here for a move back north, right? These are kind of my picky little entries that I like. These low risk entries that have well-defined lines in the sand, and just a good overall reason to be in the trade. Now there is somewhat of an ugly head and shoulders on this chart as well.
Let's see. Ugly head and shoulders. Are you looking at the daily here still?
Yeah, I mean it's pretty ugly, right? Because your head is right there at the top of your descending broadening channel. Your
I
right
see.
shoulder is inside of it, and then your left shoulder is kind of back here in like September, right?
Yep, I can see here. I'm drawing it on here as we speak.
I would not label this a textbook Head and Shoulders by any means. There are a lot cleaner versions out there. But it's something to be aware of, right? And
Yeah,
you
it's
know,
there.
but
It looks a little bit like the formation of a Head and Shoulders, but yeah, that's a tough one right there.
yeah. Um, but I like it, right? Like I said, going back to just the low risk entry, you have your line in the sand about a dollar or two away from your trading where you're trading right now. Um, so we'd have to do a whole little lesson on Greeks and stuff like that. But there's a pretty low risk way to play an options play here for a move back north. Now, if we break out of this descending broadening channel and you are buying calls here at this 222 level, well, you're in for quite the Santa rally with Amazon.
Yeah, I could see that. So now I'm looking at it. I do have a question. If that was going to be your line in the sand, that's really right at that 200 level. And the previous two times that we bounced, it actually went below it a little bit. So would there be a reason to maybe have that line in the sand down to like 218 or like 217, or is that 219 level really going to be more along the lines of what you're looking for?
That 219 level would more along the lines be what I'm looking for. Now, you're right? We did kind of close below that level and we did bounce up. So closing the trade at the end of the day, just because we're closing below that level, that's kind of where your own personal risk tolerance comes in, right? Because we could have easily, at those two closes below the 200, we could have easily dropped, right? But we are kind of, lining up with the end of the year and our Santa Claus rally, and we had an earnings report that actually saved Amazon as well. You can see that right there.
Yep, I have that pulled up on the right side of my screen here. The estimate was actually, let me just go ahead and pull it up here. Oh yeah, Q3 way overshot its estimate by about 15-20% of what it was estimated. So yeah, they way overshot their estimate on their last earnings report.
Mm-hmm. So you can give it a day, right? If you get a close below the 200, you can be like, all right, I want to see what tomorrow does. And if bulls are like, I didn't like that, and they force it right back up, you can be pretty confident, right? Now, if the next trading day, the 200 starts to turn into resistance on the day, you need to run. Because the second that 200 starts turning into resistance on the daily, the odds of a move down go a lot higher.
Okay, that is some solid analysis there. Yeah, and that could also be the catalyst to start, the potential breakout of this descending formation that I'm looking at here as well. So I've already measured 4 targets on that descending formation. So yeah, if we do see a bounce off the 200, that would make a lot of sense to actually give us some conviction on this next leg of the journey here on Amazon as well. Very cool, very cool. All right, let's go ahead and move on here. What about Meta?
What about Meta? Meta had an interesting day on
So,
Friday.
d- you know, don't call the kettle black, but I'm seeing a descending broadening formation. I don't know about you, but it's staring me right in the face here.
Yeah, no, I agree. But you can see where you're at. You're on the 12-hour.
Yeah, I'm on the 12 hour. I could switch it to the daily if need be here. Let's take a look. Oh yeah, we had a really interesting day yesterday. Just a huge wick that got rejected. Really a shooting star candle is what we saw yesterday. That's not good.
Yeah, so right, that's what gives me pause with Meta is yes, we have a descending broadening channel, but the breakout was just so harshly rejected. I mean, I didn't even really get there, but yeah,
Now, it is interesting because this is a shooting star candle in the middle of a downward trend. So you don't see that a whole that you really don't see that often. That is a very interesting candle in a very interesting place.
So you know what I do when I see very interesting candles in very interesting places?
What's that?
I sit on my hands.
That is what I've been suggesting for the last 5 or 6 streams that we've done here. And, you know, another reason for that is even if I am sizing this up as a descending broadening formation, this descending broadening formation is taken 6 months to form already. And we're right smack dab in the middle of it. I have nothing to do here on Meta besides like my normal share buying.
Yep.
Other than that, yeah.
We're middle of the road. So when it comes to options trading, middle of the road is death.
Yeah,
Unless
you
you're
don't have a
playing
strong enough
leaps
edge.
that have, 1 to 2 years expiration on them, you don't want to be buying middle of the road anything. You want to be buying tops and buying bottoms.
I am seeing a bit of bearish divergence here on the MACD because we had our last swing high October 29th around that 750 level. And then we had probably had a lot to be contributed to that gigantic wick yesterday. But we had a large upward move on the histogram with making a lower high. So yeah, that's giving us some more bearish indication there as well. Yeah, not a whole lot here on Meta. I have nothing to say about it at the moment. I'm not even going to measure any targets or anything. I just don't have anything to speculate about this particular asset. And I'm much more like to play long moves than I do short anything. I don't see a opportunity for a long or a short at the moment. So yeah, I'm also sitting on my hands on this one.
Yep. We can take a look at Apple real quick if you want.
Oh yeah, Apple, I'm sizing up for a downside move here.
There you go.
We got a ascending. Okay, let me turn the algo off and we'll just talk about this guy. So we had a descending broadening formation breakout, hit all 3 targets. While we were hitting those 3 targets, we formed an ascending channel, right? Ascending patterns are bearish. So is that similar to what you're sizing up here?
Yes, I think Apple's got some downside.
Yep. How I've measured these targets, I'm measuring that actually we might have a breakout a little sooner than I was speculating here. Let me pull my breakout zone a little bit closer here because I'm thinking we might have a downside breakout probably in the next like 3 or 4 days. I don't know, possibly. Is that kind of what you're looking at here as well?
Yes, I mean, I think it could be as early as tomorrow, right? Apple kind of closed at an ugly level today. We kind of wanted to keep that like 276 area that they kind of held. Like you could kind of see on Thursday of last week on the 4-hour, there was that really ugly wick down, but buyers came in and right back up to that 276, 277 level. So I would have liked to see that hold today. Since it did not, I would not be surprised to see Apple make a trip back to 263, 263.50. I wouldn't even be surprised to see 253, right? 253 would kind of line up with
my first target I have measured
breakout.
here is at 252, so
perfect. And then that's always I'm always looking at these guys, but that also lines up with our 200-day moving average on the 4-hour.
actually, you know what I want to do here? I want to measure a third target. I only had 2 targets on this one so far. One was at 253, and then the other one was around 225. But I like what you just said, so I'm going to measure a third target before we get to this breakout here. Oops.
225 would be rough. That's
I don't think it's going to go down there. That's just the target that I have measured at the moment. But I do want to measure. You were just saying that 263 level. Is that what you were saying here?
Yeah, that's my first target.
Okay, so that matches up with the swing low from November 20th. That makes sense.
263, 265, somewhere in there.
We're going to put it right in the middle, 264. That doesn't give me a very good... Actually, I could probably take my stop losses down here. So I'm measuring the stop losses on this this descending channel breakout at about the 281 level. So yeah.
And I can just tell you from experience that bulls are gonna step in right there. They might not be successful at saving it, but you'll at least see bulls step in at 264, 263.
Absolutely. Yeah, they're going to try and defend that level of support right there, most likely.
Mm-hmm.
Okay, well, yeah, we have a very similar outlook on Apple at the moment. Ascending channel with the potential to start breaking out tomorrow within the next couple of days, unless we see a market-wide bullish bounce. That could also happen. In which case, we might just have to remeasure our targets a little bit. But yeah, I'm definitely expecting a little bit of downside on Apple. Let's see. We looked at MACD and RSI. Not really seeing too much on the MACD or the RSI. Maybe, no, not really divergence on either side. Actually, we are seeing a little bit of bearish divergence on the RSI, where we're having a lower high on the RSI from the highest point we saw back in September. So that is giving us some more credence that we might see some downside action. We're seeing waning pressure on the RSI. So, yep, looking for some downside on Apple, but that's okay because it just had a new all-time high, like, what, last week, the week before last?
Yes.
All right.
Let's see.
Anything else to add here on Apple?
I don't think so.
Okay, let's go ahead and move on to Microsoft.
Yeah, that's what I was just looking at.
So
I think Microsoft has a date with 454.
Okay, hold on one second. Let me turn the algo off and we'll go straight analysis on this guy. I don't have any analysis drawn on this one for some reason. Okay, let's see. What time frame are you looking at here?
I'm on the daily.
On the daily.
And yeah, I think Apple's got a date with 454,
Microsoft we're looking
maybe
at right
even
now.
447.
Oh, I'm looking at Microsoft on the daily. I'm seeing a double top.
Nasty double top on the weekly. Nasty double top on the weekly.
Ooh, yeah, let's take a look at that real quick. That'll give us a little more insight here on the longer time frames. Oh, yeah, that's like a tweezer top on the weekly. That's not good.
Yeah.
Yeah, so all-time high followed by tweezer top or double top. I'd say on the weekly it looks more like a tweezer top. Definitely looks like a double top on the daily. Yeah, let's go back to the daily. So you're thinking Microsoft has a date with what? 460?
454, maybe even like 447.
All right, let's go ahead and draw some of these on here. 454. Oh yeah, definitely 454. We're really using that previous, let's see, the previous all-time high that was, I'll just draw another horizontal line on here. So we're looking at that previous all-time high as support right now, potentially. Definitely could see a date with that 454 level. And then I guess the next level of support might be looking at here is around that 436, 435 level. So
yeah, I have baby support drawn in at like 447, but I don't think it'll do much.
yeah, we only have one price interaction at that 447 level. We can throw it on here though. Let's say right about there. Yeah, so we got a little cascading levels of support from where we are now down to about 435 is what I'm
Now
seeing
that's
here.
where I get real interested in Microsoft, right? 435, 436. It's like, okay. But what else are you staring at Microsoft right there? There's a giant gap.
Yeah, massive gap. Actually, I think I have the gaps indicator. Hold on, let me, one of these charts, I think it's Tesla. I got the gaps indicator. Where are we looking at here? No, that's not it. Is it on Meta? Yep, gaps here. Let me just get this guy so we can visualize it. And we'll throw. So this indicator is really cool. Just go ahead and type into the indicators on TradingView gaps, and it will print as many of the gaps as you want to see. Like you can put like 10 gaps, 20 gaps. I just put like 100 because I want to see where they all are. But yeah, we definitely have a very, very large gap around 425 to 400. Is that what you're talking about there?
Yep.
Yep, gaps like to get filled, so that just pretty much just printed 2 new support levels when I added the gaps indicator here. So yeah, it looks like the bears are definitely in control at the moment. I will say, now that I'm looking at this thing on the daily, we are kind of having possibly a descending formation that could be broadening. It could be very interesting. Maybe not. More like a channel, if anything, actually. I'm going to just go ahead and put that on there as a channel. Now that I'm trying to measure it here, I think it's more of a channel. Yeah, it looks like we're in a bit of a descending channel. So yeah, we could speculate at some point when we get down to these levels of support, we could definitely speculate a breakout to the upside on a descending channel. So we'll definitely keep that one in mind for future shows here.
Yeah.
I'm not really seeing anything that's like making Microsoft jump out at me for like a technical analysis style of play at the moment. I think we do need to see a little bit more downside and find some support. Microsoft does like to dip pretty deep sometimes, so I could definitely see coming back to even like fill that gap. That'd be a little bit crazy, but it wouldn't be out of the realm of possibility, that's for sure.
It would not be. And then 400 is also a huge psych level for Microsoft as well, right?
Absolutely.
Everybody likes round numbers.
So just a bit of a recap here. Daily, we're looking at double top. Weekly, maybe a tweezer top. So that gives us a little bit of conviction that we are kind of in a bearish control stance at the moment. We did just analyze that we could be in a descending channel. So further downside to, 447, 454. I'm sorry. Yeah, 454, 447. And then 436, and then possibly to fill that gap all the way down around 400. So definitely looking bearish at the moment on Microsoft.
Now the caveat to that is if bulls simply defend the previous all-time high of 467, like their lives depend on it, and we just see some consolidation here.
Yeah, absolutely. Absolutely. In which case, I'll probably be adding some speculative targets to this next stream. I'm not going to do it on this stream. That'll just take a little bit too much time. But yeah, next stream, if we do start to see some defense going on here at that previous all-time high level, we can start speculating maybe a potential breakout move to the upside. So yeah, that seems like a little bit too much confusion for me to do anything at the moment besides my typical activities, accumulation and using the algorithm. But yeah.
Right. And yeah, from an option standpoint, again, just we don't like middle of the road, and that's where we are. So
very good. Okay, let's go ahead and move on to NVIDIA because I do have some things that I am looking at on NVIDIA here.
Yeah, I'm in a play on NVIDIA personally that's been going well.
Tell us about your play on NVIDIA and what your analysis there was.
Well, so I started scaling into longs on NVIDIA. And I kind of just put a lot of time on this play, and I'm being just a little bullheaded about it. I talked earlier about not inventing new reasons to stay in a play. Well, I did it 2 or 3 times here with this NVIDIA play. Um, and there's potential for it to work out just because of the buffer of time that I gave myself on the play. But as far as all-star plays from my trading history, this is definitely not one of them.
Are you looking at NVIDIA on the daily for this analysis?
Yes, I am. Now I'm kind of just looking for that 173, 174 area to pretty much hold as support here. You can kind of see we spent the last 2 weeks, 175-ish was basically our bottom.
Yeah.
So I have until March on my NVIDIA play. So again, I'm kind of being a little bullheaded on this.
Well, that actually makes perfect sense because what I'm speculating here is we're in a descending channel, right? And I have 3 targets measured that go out to about March 23rd. So
Yep.
third target is measured all the way up to 222. So I do have my own speculative play here going on that is if we do start to break out of the upside of this descending channel, that I will be playing it with 3 targets, which currently I have measured up to 222. But if we go a little bit lower and start to break out before before we really start to see any action to the upside here, I'm kind of just waiting to see. Might have to adjust my targets a little bit, so we actually might be looking more around like the 215 to 220 level when I adjust my targets. But yeah, I have that speculated around March 23rd. So it looks like if we start to break out to the upside, that one might pay you for sure.
Yeah, it will be good. What's going to hurt me even further on this play is if we go back down to the bottom of that descending channel. Then at that point, I don't think I'll ride this play that long. I think at this point I need to use this 175 as kind of my line in the sand, because at that point, just where I'm positioned, I won't, even if a recovery does happen, I don't think it'll happen in time for me.
And how much are you losing for every dollar on the contracts that you're holding at the moment?
Let's see. So my average price on contracts is $94, and they're currently trading at 33. So I'm down about $60 per contract right now.
And in order to see those turn into a profitable trade, what would you have to take an ad or something like that, and then be expecting what level on NVIDIA here?
Yeah, I mean, if we were to lose 275, that means we're probably going to go back down and test like 166, 168. If I were to choose to stay in this play, I would have to essentially take more at that 166, 168 level, to just bring my average down more and give me a fair shot.
Mm-hmm. Yeah, I would definitely have to move my. If we came back down to those levels, I would have to move my targets pretty far down. In which case, maybe top target would be like around all-time high again. So, yeah, I'm currently not really taking any action on this. Just waiting to see if we do start to come back down to the heart line of this channel, and God forbid we go down to the bottom trend line. But
Yes, that would be a little interesting. But yeah, I mean, as it sits right now, I'm as leveraged as I want to be in the play. So now I just kind of need to really respect my rules.
mm-hmm. All right, NVIDIA. Well, that's the Mag 7, people. Thank you so much for your added analysis here. That gave me some really nice insights. I think it probably gave our spectators some nice insights as well.
Yeah.
Again, Ethan's our options guy, so if you guys have questions about option stuff, just go ahead and go into our Discord channel and shoot us a message. Yeah, what else do you have? Do you want to talk about any other particular assets here, or I was just going to talk about a little bit of some of the work that I did the last couple of days on a few of the futures algos, but other than that, yeah, I was going to give it maybe 10, 15 more minutes on the stream here and see if we can't catch a live trade. I am trying to catch one of these live trades each stream, but as we've seen, sometimes they come at like midnight, so a little hard to determine when the analysis is going to actually go through because the trade's not going to go through until the TA lines up, and being an algorithmic trader, that doesn't happen at the same time every day. So
Trust the algos.
yes.
But yeah, let's take a look at futures here for a little while. And then I think we
Okay.
can call it a wrap.
Very good. Yeah, so I've been working on these, low and slow kind of, stick it in the oven and let it bake kind of futures algos the last like couple of weeks here. And I'm using another provider, Algo Pro. So they got really good stuff. It's super cheap. You can find them online if you just Google Algo Pro. They launched a new algo called Evo X, which I found to be really good for day trading. Never had the most luck with our suite of algorithms in the day trading side of things, so I'm gonna kind of try and program a few more that are more designed for day trading. But other ones that I haven't launched yet, Ethan, are like our pivot point strategy, right?
Sure.
And the basic Renko reversal, I'm gonna be making that one for a little bit more day trading stuff. But the ones that I'm trying to catch live on the stream here, I have like 6 different versions of that at the moment that I'm looking at. And yesterday we had a successful trade, although it was only, let's see, I think we caught maybe $50 on this trade yesterday. So not going to be getting your 150K account passed very quickly at $50 a day. But we have seen throughout the rest of this week, we had like a $500 day, a $300 day, a $200 day, and then couple weeks ago on Monday, when this thing was still in the paper account, it had a $4,000 day. So this thing martingales. So if it wins its first trade, it's just going to stop trading for the day. If it loses its first trade, it's going to martingale into a second trade, which I haven't seen in a couple of days. So yeah, we've had a few winning days in a row here. And it'll do up to 3 trades in a day, so it can martingale up to 4 contracts in a single day. If it loses 3 times, it'll go into the next day with 8 contracts, and that's the maximum amount of contracts it'll take, which, if you've traded futures, 8 NQ contracts is absolutely bonkers. So just waiting for the day that doesn't work at all. But, so far, if we look at the strategy report here, it's got a really, really nice profit curve, more than a 10-to-1 risk to reward ratio, from max drawdown being about 2.52%, and overall gain on this one about 46%. That's if we're looking at it through the lens of a $100,000 account. So, typically a $100,000 account will have around $3,000 of drawdown. So I've been running this thing in a 150K account, which, if I look at it at the moment, is up about $500. It's been a little, it's been kind of idling here because the few days ago, one of the trades didn't actually launch automatically, so I tried to take it manually and ended up losing $200. But hey, that's part of the game, right? Now I got everything launching automatically, so I'm expecting much more of a even keel kind of profit curve here. And if you want to use any of the prop firms that we use, I use Tradify and Apex for the most part, and we got links down below. We got discount codes down below. Apex is currently running a 90% off sale for the next like 24 hours, so you could take advantage of that with our discount code. And also, Tradify is running like a 40% off sale at the end of the year here, using code Killer Whale, you can get 40% off. So, if you're interested in any of that kind of stuff, that's absolutely available. If you want to use our suite of TradingView indicators and strategies, we're giving that away completely for free. So go ahead and give this video a like, subscribe to our channel, and drop us your TradingView username in our Discord support. You can find links for all of this stuff in the description down below. We've had a few people, since we only started this stream like a week ago, we've already had a few people joining in and starting to learn how to use the suite of indicators and algorithms. And what I'm looking for is community participation. So if you have assets you want us to review, if you have indicators on TradingView that you want us to do a review of, strategies on TradingView, anything like that, just go ahead and let us know in our Discord channel and like our general chat or our support channel. And yeah, we're looking to build the largest and most successful algorithmic trading community on the internet. If you're interested in trade automation or automated risk management, you've come to the right place, and we're here to help. So, while we are getting this thing off the ground, we just want to really put out there that we're going to give you a lot of our time, a lot of our dedication. And if you want to use our industry grade algorithms, but you don't really want to go through the whole process of looking at TradingView charts and learning how to do technical analysis and learning how to use the 1,000 buttons in one of our algorithms, you can go to killerwhaleventures.com and hook up any of the major cryptocurrency exchanges: Coinbase, Binance, Kraken, KuCoin, Bitpanda, Huobi. The list goes on. We've programmed all of this stuff into our own Killer Whale Intelligence platform. So again, you can find information about that as well. It's very easy. We use a conservative, moderate, and aggressive model that trade the top 10, top 20, and top 30 coins by market cap. So if you're interested in something a little more hands-off, that's easy to manage and all in one place, you can find that at killerwhaleventures.com. And we have a 50% off sale going for the rest of the year that basically goes until January 1st. So if you want to get 50% off any of our KWIP memberships, that's going to be using code using code CyberMonday50. So yeah, if you want to get 50% off of any of our AI memberships that you see on the screen here, we got our advanced portfolio for people with a bit higher capital that they're starting with. We recommend anywhere from $25,000 to $100,000 accounts here, and anywhere from $4,000 to $25,000 accounts on our main memberships. So again, code CyberMonday50. And that's enough advertising for now. I think that's going to do it for the day. So thank you all very much, and we look forward to seeing you tomorrow. Bye-bye.
We'll see you guys next time.